If your parent has an RRSP or RRIF, there's a chance the wrong box on one form is going to cost the surviving spouse $100,000 or more in tax. The form is decades old, and nobody checks it. This is Diane. She's 71, a retired teacher in Hamilton. Her husband Gerald died unexpectedly. He had spent 40 years building a $310,000 RRIF, a registered retirement income fund. On the original application form, in the box marked Beneficiary, Gerald had written, "My estate." Most Canadians assume that as long as the spouse is mentioned in the will, registered accounts roll over to them tax-free. Gerald's will said everything goes to Diane. The will didn't matter. The RRIF contract has its own beneficiary line. That line, not the will, determines whether the RRIF rolls over to a surviving spouse tax-free or whether the Canada Revenue Agency treats the entire account as sold at fair market value on the date of death. When the box says, "My estate," the rule is simple. The CRA treats Gerald as having received $310,000 of income on his final tax return. At his blended Canadian tax rate, the bill on that deemed disposition came to roughly $124,000. Diane inherited a depleted account. What should have happened? Gerald's spouse named directly on the RRIF contract, not in the will, the contract. The Income Tax Act gives 3 different paths to roll over an RRIF tax-free to a surviving spouse, but all 3 require the spouse to be named on the contract itself or as a successor annuitant. Estate has beneficiary disqualifies all 3. Even when the spouse is named correctly, there's a timing trap. The funds must be transferred from the deceased's RRIF into the surviving spouse's own RRSP, RRIF, or eligible annuity by December 31st of the year following death. Miss that window and the rollover is gone, back to deemed disposition on the deceased's final return. For families who discover the estate as beneficiary mistake after the death, there is a partial rescue. The legal representative of the estate and the surviving spouse can jointly file CRA Form T1090, designating the RRIF amount as paid to the spouse. The spouse then makes a special contribution to her own RRSP or RRIF within 60 days of the payment, claiming an equivalent deduction. The tax bill effectively zeroes, but only if both parties act inside the 60-day window. If you or a parent has a registered retirement account, 3 things to verify, at any age, before the question of death enters the conversation. First, the beneficiary line on the contract, not the will, the contract. Pull it out, check it. The surviving spouse should be named directly. If anything else is listed, the tax-free rollover is unavailable. Second, if you want automatic continuation with no transfer required, the surviving spouse can be named as successor annuitant instead of beneficiary. The funds stay inside the RRIF. The spouse becomes the new annuitant. No transfer needed, no deadline, no form to file. This is the cleanest of the 3 paths. Third, every life change, marriage, divorce, remarriage, the death of a previously named beneficiary, is a moment to update the form. The CRA reads what's on the contract on the date of death, nothing else. Gerald and Diane had been married 38 years. Gerald filled out the beneficiary form once before they were married and never updated it. Diane learned about the $124,000 tax bill in the 3rd week of grief when the estate accountant called. The form is 1 page. It takes 10 minutes to update. Most Canadians never do.